Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 4 o'clock in New York on Tuesday, 23rd day of December 2014, and this is the daily report for gold and silver. Mixed bag in the precious metals markets as we have gold off a little bit, silver up a little bit. First to gold, currently trading off about $3.30. The low today, 1171.40. The high, 1185.10. Current print, 1174.11. Silver is currently trading higher, but just nominally higher. Currently trading below $16 per ounce at $15.69. It's up about 3 cents on the day. As I said, in essence, unchanged. $15.49 on the low, $15.97 on the high. More on silver in a little bit. So traders, although we are getting ready for our Christmas and New Year's holiday, of course, Christmas Eve begins tomorrow. We will have a very, very short show as the markets are closed at 12 noon in New York. But first, let's take a look at what we're looking at and if any information is available to us. Very short-term chart, 720-minute chart. We have put in the relationship that we have seen on this last rally as having a series of higher lows as well as higher highs. Now, once we came up and tested this one area, we absolutely found that we have resistance. This is 1252. This was that top that we said we absolutely needed to take out. I believe that the high that we got was roughly at around 1240, 1241. You can see that top here. Market came under pressure and is now quickly approaching a pretty dramatic in terms of a critical area within the marketplace itself on a purely technical basis, and that is the point of 1160, 1158, roughly in that area. Now it comes up here as a 23% retracement area, but that's not where that number comes in with such critical importance. To really see that, we really need to look at our long-term studies, a weekly chart. Let's go ahead and pull that up. So traders, this is the chart that I'm talking about. It's a weekly chart, and on this weekly chart, I've got, in essence, two fib retracement areas. I'll go ahead and compress it so you can see where they come from, and then we'll go back to our previous view. But the two basic fib retracements, one begins roughly at $1,400, goes to the record top of 1919 or 1920. The second begins after the market rallied, came up to 1,000 and then retraced back to about 700. We have that here at 687 and 1486. Now, when we do that, we look at our 61% retracement for the shorter term and our 50% retracement for our longer term fib studies, we get the following numbers. And of course, one of the markets that we're looking at is the dollar index. We talked about the fact the other day that we had this triple top, really, which started back in towards the end of 2008. That's these three tops here. And you can see that we've absolutely exceeded it at this point. That was at around just above 89. We are now at 90.35. And as I've said, I look for our next resistance, major resistance, to come in at 92, which is a good couple of points away. However, there is a minor area. To get there, I'll really want to compress this chart just a little bit so we can pull it up. But there's a minor area which is based upon this particular top right here. Let's go ahead and enlarge that a little bit so you can see what we're looking at. But that is based upon this top right here, and we're just shy of that. I would believe that that's going to be right at around 91. Traders, of course, the other market that we have been looking at in terms of finding some sort of direction for gold has been the Standard & Poor's Dow Jones Industrial Average, the U.S. equities markets. Short-term chart, this chart is a half-a-day chart, standard candlestick format, and we can easily see that we are now back near the record highs. In fact, we could look to exceed them. Although we're trading at 2078, I believe the high was about 2080. We are right in that particular area. More importantly, where do we think this equities markets could head to? And to get some sense for that, we really have to pull up a longer term Standard & Poor's chart. And traders, we've done just that. We are looking at our Standard & Poor's. This is the E-mini. And on the E-mini, I've basically calculated one Fibonacci extension. And I wanted to spend a couple of moments to explain why we put this extension up and what it might forecast or tell us. And so what we've done is I'm looking at this in terms of a basic Elliott wave count as a wave 1, our wave 2, and I believe that we are currently in a wave 3 in terms of a straight Elliott wave count. Now, there's a couple of different ways you can forecast a third wave, and you base that on a benchmark of wave 1. And so if we are to say that the golden rule in Elliott wave forecasting is wave 3 cannot be the shortest of any of the impulse waves, well, that tells us that it's got to be at least equal. Now, equal in this case would have only taken us to about 1753. That's a 100% extension from this bottom here up to 1753, and I believe that that is 1061. However, what you will typically get on a third wave is anywhere between 150% to 161% extension. With that being said, you can see 2099, call it 2100 to round it off, would be the number we would look at as 150, and 161 would take us to 2181, so a little over 100 points from here. And I believe that our current targets are going to be based upon these two numbers, whether it comes out to be 150% or 161%. However, as long as the dollar continues to strengthen, Standard & Poor's, Dow Jones, U.S. equities as a whole continues to be strong, we will see continued pressure in gold. And then lastly, we need to take a look at crude oil. So whether or not oil is forming a base in this area, finding some support, we've had these lows just below $55. We're looking, of course, at a weekly chart. You can see that for the week, we're trading just above $57 a barrel. We are down slightly on the week, so we have oil continuing to be under pressure. It's not moving back up. Equities market strong, dollar strong, and of course we're seeing gold weak. I would expect those trends to continue between Christmas and New Year's. However, anything is possible when you have very thin markets. Last, let's take a look at silver. And the real key with silver is whether or not it's actually going to trade in sympathy with gold, which is under pressure, or sympathy with the equities markets because it is an industrial-based metal. Now, when we go ahead and we compress this, let's do that a little bit. And all I've done is converted it to a two-day chart so we could get more information onto the screen. But when we take a look at this chart, we see some things that kind of really pop out at us. And the first thing that we see, of course, is this $14 mark. We had that really almost incredible day. This came on the Monday following our Thanksgiving holiday. This is a real print. When we saw it come down and test 14, that kind of matches this particular low here beginning at 2010. So I see that that could have some real support in the market. Our next real area is just at where we're at, and it's based upon, as you can see, this top here, which is roughly at around 1550. My sense is if the market holds this particular area, the next real level of resistance is about 1580 and then, about 1750 and then $18. Major resistance, major support at $14 per ounce. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow to wish you a Merry Christmas. Bye-bye.